Hello and welcome. Today we're diving into a topic that affects nearly everyone. How banks make money from your paycheck. Every month, you receive your paycheck. But did you know, your bank is already making money from it? When you deposit your money, the bank doesn't just hold it, they use it to earn profits. Banks lend you deposited money to other people, businesses, and investors at higher interest rates. The interest borrowers pay is higher than the interest the bank gives you. That difference is called profit. Even if you earn a small interest on your savings, the bank multiplies that money by lending it out. A $100 deposit can become $900 for the bank through loans, credit cards, and mortgages. Banks also earn money every time you use a credit or debit card, charging fees to merchants. These tiny fees for millions of transactions add up to billions in profits annually. Banks offer personal loans, mortgages, and business loans, all funded by your deposited paycheck. You may get 0.1% interest on your savings, but borrowers pay 5 to 20%. That's a huge gap the bank keeps. Even ATMs make money for banks through withdrawal and maintenance fees. If you overdraft your account, banks charge extra fees, turning a small mistake into big profits. Deposited money isn't just sitting there. Banks reinvest it in multiple ways to maximize returns. Banks invest in bonds, stocks, and other securities, using a portion of your deposits. Even if you don't borrow or invest, your account is making money for the bank behind the scenes. Banks practice something called fractional reserve banking. They only keep a fraction of your money on hand. For example, if the bank holds 10%, the rest is lent out to earn interest and profit. This system allows banks to expand the money supply while profiting from your paycheck. A single deposit can create multiple loans, multiplying the bank's earning potential exponentially. Every time you use your card, banks earn transaction fees from merchants and payment networks. Miss a payment on your credit card. Banks profit again from late fees and interest charges. Banks also profit indirectly by offering payday-style short-term loans at high interest rates. Mortgages are a major source of revenue. Your paycheck funds your mortgage, and banks earn interest for decades. Even if you split your paycheck between accounts, banks leverage every dollar to create profit. Banks use sophisticated investment strategies to turn small deposits into huge returns. Your paycheck is the starting point of a complex money cycle, benefiting banks more than you. A fraction of your paycheck grows silently into massive wealth for the financial institution. Bill payments, wire transfers, and online transactions all generate fee revenue for the bank. Interest on loans is compounded, meaning the longer you borrow, the more profit the bank earns. Even minimal savings deposits can fund large loans, creating huge profit margins for the bank. Banks also make money by charging fees for financial advice, wealth management, and investment services. Your paycheck circulates through the economy, while banks continuously earn from multiple streams. Even during economic slowdowns, banks find ways to profit from deposits and interest. Some banks charge monthly inactivity fees, earning money even when you're not actively using your account. Hidden fees, maintenance charges, and penalties quietly generate revenue from your account. Most people don't realize how much their paycheck that contributes to the bank's income. Banks use rewards and cashback offers to encourage spending, which increases their transaction-based income. Interest on loans, fees, and investments make up the majority of a bank's revenue. Your paycheck is a key component in this money flow that creates profits for financial institutions. Digital banking may seem convenient, but it also increases the bank's ability to track and profit from your money. Compound interest benefits banks far more than it benefits most account holders. Banks earn thousands from loans while paying just a fraction to you in interest. Multiple loans can be funded by a single paycheck, multiplying bank profits. Overdraft limits and penalties are another way banks make money off your paycheck. Your deposited money quietly fuels the bank's growth and profitability. Small business loans are funded by your deposits, and banks profit from interest and fees. Carrying a credit card balance is extremely profitable for banks due to high interest rates. When millions deposit paychecks, banks gain immense capital to lend, invest, and profit. Your paycheck is just the entry point into a profit funnel that benefits the bank continuously. Even your savings account, though small, is a tool for banks to generate revenue. Banks manage risk carefully to ensure your paycheck turns into a steady stream of profit. Every time you receive your paycheck, banks are ready to put that money to work for profit. Encouraging credit card usage is a strategic way banks earn from consumer spending. Banks offer investment products funded by your deposits, adding another revenue stream. Deposits are used repeatedly in loans, creating a cycle of continuous profit. Different banks charge different fees, but the underlying profit mechanism remains the same. Banks earn from interest, fees, and investments, all starting from your deposited paycheck. Each deposit, fee, and interest payment compounds, contributing to growing bank profits. Deposited paychecks can even be used in international investments, earning banks more. Every service you use, checking, savings, loans, feeds into the bank's profit cycle. Banks earn far more than what they pay you in interest, all starting from your paycheck. Digital transactions increase bank profits while making it seem effortless for you. Your paycheck moves through multiple financial channels, multiplying the bank's earnings. Banks strategically market loans and credit cards to leverage your deposits further. Even small fees accumulate over time, contributing significantly to bank profits. Reinvestment of deposits ensures banks keep profiting from your paycheck continuously. Understanding how banks make money from your paycheck can help you make smarter financial choices. Your paycheck fuels the bank's profits more than your own savings or investments. By knowing how banks profit, you can manage your money better and reduce unnecessary fees. Thanks for watching. Don't forget to like and subscribe for more money insights.